Okay, let's start with a question. What if your country's money, like the cash in your pocket, became almost worthless overnight? Imagine the chaos, the fear, right? How does a government even begin to regain your trust, let alone stabilize an entire economy that's just teetering on the brink? Well, today we're diving into a really fascinating chapter of economic history. We're talking about Thailand's 1943 gold bonds and how they were redeemed quite remarkably in 1951. And just to be super clear right up front, we're not talking about those, everyday gold-colored coins from the 50s. Those were mostly base metal. No, this deep dive is about a very specific, incredibly rare series of actual gold coins and bars produced for one very unique, very critical purpose. So our mission today is to explore how Thailand, right in the middle of World War II, used the power, the actual value of gold to fight off runaway hyperinflation, and how they used it to restore public faith in the government's promises and basically signal to the post-war world, hey, we're fiscally reliable. Okay, let's unpack this. It's a pretty amazing story.
So to really get why these gold bonds were such a big deal, we need to paint a picture of Thailand during the war. Think 1941 to 1945. The economic situation was, well, Dyer doesn't really cover it. Sources call it a crisis of unprecedented severity. The government was bleeding money from two sides. You had their own huge wartime spending, obviously. But then you also had the enormous financial demands forced on them by the occupying Japanese military, a double whammy. Yeah, and this led pretty quickly to a total fiscal collapse. Government spending just blew past revenues, huge unmanageable deficits. And it got worse, didn't it? The currency situation was messy too.
Oh, absolutely. The Thai baht was pegged problematically 1-to-1 with the Japanese yen, which was a massive devaluation from where it was before the war. And critically, the Japanese military could just demand the printing of new money to pay for their expenses in Thailand. So you had this uncontrolled flood of new currency hitting the market, completely disconnected from any real economic output. When that happens, well, chaos.
So what does that actually do to an economy when money loses its connection to value?
It leads to hyperinflation,
Yeah.
catastrophic hyperinflation in this case. It just destroys the purchasing power of the currency. Think about the hardship for ordinary people. We actually have some stark figures. If you set the cost of living index at 100 back in 1938, by 1945, it hit 1,069.54.
Wow, more than 10 times higher in just 7 years.
Exactly. And these aren't just abstract numbers. This had real-world impact. Sugar, for example, was 39 times more expensive by the end of the war than before it started. Cotton clothing, a basic need, 29 times more expensive.
Unbelievable.
People's savings were just wiped out, annihilated. The baht basically stopped working as a store of value. And that creates this deep, deep crisis of public confidence. In that kind of environment, how can the government issue normal bonds? Who's going to buy them?
Right, you'd expect your money to be worth even less when they paid you back.
Precisely. So this gold bond idea, it wasn't just, a clever financial trick. It was absolutely essential, a prerequisite for any kind of government borrowing to even be possible.
It sounds incredibly desperate. Was there skepticism, though? Like, why trust a gold promise when the regular currency was failing?
That's a really good point. The government faced a huge credibility gap. The strategy really grew out of that desperation. The legal basis was the Domestic Loan Act of 1942, which let them try to raise up to 30 million bisaut. But the genius really was the dual purpose of these gold bonds. Yes, partly to fund the war effort, the immediate needs, but maybe even more importantly, it was designed as an anti-inflationary tool. It aimed to soak up all that excess cash floating around, pull money out of people's hands, basically, to cool down prices. It tackled both the funding and the trust problem head on.
Okay, so how did it work in practice? What were the actual terms that made people think, okay, maybe this is worth buying?
Yeah, so easy to sit down.
The gold bonds, they were sold for about a year, starting mid-1943. They came in different sizes, 50, 100, 1,000, even 10,000 baht denominations. And they had an 8-year lifespan, maturing in June 1951. Plus, they paid 3% interest annually, split into 2 payments a year. But here's the kicker, the thing that made all the difference, the redemption clause. When the bond matured in 51, you had a choice, cash at face value or physical gold. And crucially, at a fixed exchange rate, 5.78 baht for every gram of pure gold. That fixed rate was everything when prices were going crazy.
Exactly. That clause, that single clause, transformed buying a government bond. Normally in hyperinflation, terrible idea, you're just losing money. But offering the gold option, That was a guaranteed way to protect yourself against the currency collapsing further. It was a hedge. People could preserve their wealth in gold, something universally trusted, right? So it cleverly lined up what people desperately wanted, safety for their savings, with what the government desperately needed to get cash out of circulation and restore some stability.
Yeah.
It was basically the government admitting, look, we know you don't trust our paper money right now, so we'll back this promise with actual gold. A very powerful signal.
Okay, so fast forward to 1951. The war is over, things are maybe starting to stabilize a bit, and these bonds are coming due. Crunch time. How did Thailand actually deliver on this golden promise? What did these redemption things look like?
Well, they had to actually produce the physical gold pieces, and they did it properly. The Ministry of Finance got high-purity gold, 0.995 fineness, straight from the Bank of Thailand's currency reserves. Serious stuff.
And they didn't just make lumps of gold, right? There was thought put into the design.
Absolutely. There was an artist involved, Mr. Tuong Salianen from the Bank of Thailand, who designed them. And the Royal Thai Mint actually produced the coins and bars, overseen by a special government committee.
So what did they look like?
They were designed to be both symbolic and functional. The front, the obverse, had the Garuda emblem, a powerful national symbol, and the words, Gold Bond Thai Government. The reverse was all about the value. It stated the purity, 0.995, and the exact weight in grams, very clearly marking them as bullion.
And they made different sizes for the different bond values.
Yes, a whole range. For the 50 baht bonds, you got a coin weighing about 8.7 grams. For 100 baht, about 17.4 grams. Then a much bigger coin for the 1,000 baht bonds, around 174 grams. And for the big denominations, actual gold bars. A 10,000 baht bar weighed over 1.7 kilograms. And apparently there are even larger ones for 100,000 baht bonds.
Wow. So these weren't just tokens, they were substantial pieces of gold.
That's the crucial point here. These were not money for spending day to day. They weren't circulating currency. They were minted specifically, explicitly, to represent the government fulfilling its promise. A physical symbol of financial integrity. Making these wasn't just about returning value. It was about visibly, tangibly rebuilding trust, literally backing their word with gold.
And that trust must have been fragile, because the years between the war ending in 45 and the bonds maturing in 51, that wasn't exactly smooth sailing for Thailand, was it?
Not at all. It was a really tough transition period. Thailand still had huge post-war obligations. Things like war reparations, they had to give away 1.5 million tons of rice for free, which is massive. Plus, they had foreign assets frozen, and the government was still running budget deficits into the early 50s. It was still a struggle.
But there were some positive signs starting to emerge, too.
Yes, definitely. Seeds of recovery were there. For instance, the Korean War kicked off in 1949. That created a big boom in demand for Thai exports, especially commodities like rubber and tin. It gave the economy a real boost, the so-called Korean boom.
And they were reconnecting with the world financially.
Right. Thailand started reintegrating into the global financial system. A really key moment was getting its first loans from the World Bank in 1950. These were specifically for big infrastructure projects like improving the railways, vital for long-term growth.
Okay, so you have this complex picture. Ongoing struggles, but also signs of recovery and growing international links. Against that backdrop, the government decides to fully honor the gold bonds in 1951. How significant was that decision?
It was absolutely foundational. You could call it an act of fiscal rectitude, basically, proving they were financially responsible and committed to sound money. Think about it. Thailand needed foreign investment, needed partnerships for rebuilding. Bodies like the World Bank were watching closely. If they had defaulted, or even tried to just pay back in baht, which was still recovering, that would have sent a terrible signal.
Yeah, that would have killed their credibility.
Exactly. It would have made getting those crucial foreign loans and investments much, much harder. So, by meticulously producing and handing over actual physical gold to their own citizens who held these bonds, they sent this incredibly clear, unambiguous message to the world. We honor our debts, we believe in sound money. That act of good faith, that tangible proof, was arguably just as important as any policy change in building the international trust needed for the economic development that followed in the 50s.
Okay, so the government makes good on its promise. But what about the bondholders themselves? Did everyone rush to grab the gold? Well, here's where it gets really interesting, maybe even a bit surprising. Only a tiny fraction, about 5% of the people holding the smallest denomination, the 50 baht bonds, actually chose the gold option. Let me put numbers on that. There were 40,000 of those 50 baht bonds issued originally, but only 2,028 of the corresponding 50 baht gold coins were ever minted for redemption.
That low number tells a fascinating story, doesn't it? It suggests that by 1951, things had genuinely turned a corner. The hyperinflation nightmare was over, the economy was visibly recovering, public confidence in the regular Thai baht, the paper currency, must have been substantially restored.
So people felt okay just taking the cash instead.
It seems so. The perceived risk of holding baht had fallen dramatically, which means that the gold clause, the very thing that made the bonds trustworthy back in 1943, it had done its job so well that by 1951, most people didn't even feel the need to use the gold option anymore.
Yeah.
The promise of gold, the government's credible commitment to it, was almost as powerful as the gold itself in rebuilding that psychological foundation of trust. The value was in the commitment, maybe even more than the metal by that point.
That's a really powerful insight into how trust works in an economy. So wrapping things up, these 1943 gold bonds really stand out in Thai history, don't they?
Absolutely unique. It was the first and so far the only time Thailand ever issued a government bond that could be redeemed for physical gold. A one-off response to an extreme crisis.
And the actual coins and bars that were made for the redemption, they must be incredibly rare today.
Extremely rare. Among the greatest prizes for collectors of Thai numismatics. Think about it. Low numbers were minted to begin with because not everyone chose gold. And then, over the decades, how many were likely just melted down for their simple gold bullion value? Probably a lot.
Do we have any examples of how rare?
Well, sources say that out of 641 of those big 10,000 baht gold bars originally made, only 2 are known to still exist today.
Only 2.
And those even bigger 100,000 baht bars, none have ever been found or documented. They might all be gone.
And that rarity means high value, I assume.
Oh, definitely. Far beyond just the gold content. For instance, one of those 1,000 baht gold coins sold at auction for 540,000 Thai baht. Many, many times its intrinsic gold value.
So what's the ultimate legacy of these objects?
I think their status today says it all. They are prized exhibits in the Bank of Thailand Museum. They're preserved not just as money, but as historical artifacts. They tell this incredible story, a story of national crisis, really clever and innovative policy, and ultimately fiscal renewal. The big lesson here is about that complex dance between money policy, public psychology, and national credibility. Thailand faced a total currency collapse. They reached back to gold, the oldest form of trust, not just to get funds, but crucially to anchor public confidence when it had completely evaporated. Successfully issuing and then honoring these bonds, it bridged that period of chaos, fought hyperinflation, and built a foundation of financial integrity that was just essential for Thailand's post-war recovery and future prosperity.
What an amazing story. From economic freefall to recovery, all built on a promise backed by gold. Really shows incredible ingenuity, doesn't it? And determination to rebuild not just an economy, but people's trust. So it makes you think, doesn't it? What really underpins the value of your money today? In our modern world of digital transactions and complex finance, does that old idea of a golden promise still hold some kind of powerful, maybe unspoken truth about what trust and stability really mean?